Hey, what's up, everybody? Welcome to the Brewing Business Show. This is a space dedicated to the craft beer industry and entrepreneurs who wants to learn more about mindset, health, wealth, business, and of course, beer. I'm your host, Pedro Meneses, and before we start, I just want to make sure you buckle up, crack open a cold one, and get ready to hear some life-changing information. Cheers. Let's go. So welcome back, everybody, to episode 31 of the Brewing Business Show. If this is your first time, be sure to check out the previous episodes and leave me a review on iTunes so you can help more people to find the show. Guys, our guest today, I believe, is one of the most prolific, competitive, and hardworking entrepreneurs that I know. Not only in the business financing world where he operates, but also in everything that he do in life. He is the president of Sprout Lending, a company that specializes in helping small business owners get access to working capital to sustain, grow, and enhance their businesses. And he's also the host of Create Success Out of Failure podcast. Today, he's here to take us into the business financing world, teach you all you need to know, whether you are a startup or established business, and also give you some live lessons. So welcome to the show, Jonathan. It's a pleasure to have you here, brother.
Pedro, thank you so much. It's an honor to be here. I love helping entrepreneurs level up any way I can.
Absolutely, man. And definitely you are a great example of that. And I appreciate that, and I appreciate you taking the time for being in my show too. Most of my audience, like I was telling you, come from the craft beer industry. So for me, it's very important to bring people like you into my show, that can share their experience, their knowledge in different industries and different things that, most people or most business owners need, tools, resources, and all that kind of stuff. So I'm excited that you're here, brother. Thankful for
Absolutely
your time. But
thank you. Yeah.
What was that?
No, I was saying over the last 12 years, I learned a lot about running businesses. I have several. And, I know how to help entrepreneurs that are stuck or explain things that people think are difficult and make them really simple, really easy to understand. So,
yeah, absolutely. So people can get to know a little bit better, man. Why don't go ahead and tell us a little about your story, your background, because I know you have a hell of a story, how you end up building Sprout Lending and your background, your family and all that stuff. So talk to us a little about your story, man.
yeah, sure, man. So, growing up, my whole family worked on Wall Street, and I thought that's what I wanted to do.
Right.
Right out of college, I decided, I'm going to go trade on Wall Street. I started with a class of 80. After like 8 months, we were down to 2. And it was me and this other guy. I forget his name. I just looked at him, and I'm like, this isn't it. Like, it just didn't feel right. So I got recruited to go into the fintech space, which is finance and technology. And I was in underwriting, and I hated being in underwriting because no matter how hard I worked, I got paid the same, and I would wait for that yearly, raise or whatever.
Right.
So I had them move me to sales. And from there, I built up a retention department. I built up biz dev, but it was a family business. And while I was running sales, I was capped out. So I decided, you know what? I'm going to go start my own brokerage in the fintech world. I started it. My partner embezzled about $500,000. I left. I ran direct sales back for the same company again, but instead of the partner channel, I was on the direct sales channel. I did that for a little bit. They got acquired, and I had a ton of stock options at the time, and they let me go 2 weeks before they vest. So for anyone that doesn't know what that means, you have to be within that agreement. You have to be on board with that company for a certain amount of time, and then you get all the options. Right. Long story short, they let go of me 2 weeks before intentionally. So then I started direct sales for another company. Okay. And it was going well. And, finally the guy comes in, asked me to come into his office, the CEO. He goes, you're making too much money. We're not going to pay you the commissions. I built this thing from scratch, CRM team, man. Everything. So at that point I was consulting for 2 places, a company called Libertas, which is another fintech company. Now they're one of the largest in the space. That was 5 years ago. And one was called Sprout. And at the time, my partner owned Sprout fully. And I'm like, all right, let's start a new company. I'll dig into this, and then we'll build it from the ground up. Well, We built it from the ground up. We have a course that teaches what we do called capital gains. That's how people come in, and we see if they're fit for our core values, our culture. And, I have advisors and agents all over the country. But what we did was when we built Sprout, we built a true marketplace. So we wanted a place where any business owner could go and get
Right.
financing regardless of time in business, credit, or what type of program. See, the problem is most people don't understand this. When you go to a bank, they might get you a bank loan, right?
Right.
Maybe a line of credit. That's it. They don't have other programs. They don't have equipment financing most times. They usually don't have invoice factoring. They don't have working capital advances if they don't have good credit. So I created a marketplace that has every single program. This
Wow.
way we can serve our clients at the highest possible level. There's been challenges, setbacks. There hasn't been a landmine I've haven't found yet,
Right.
So it's part of it. And being an entrepreneur is just moving forward, no matter what, moving forward, and don't let anything stop you from your mission. Our mission is to help business owners level up through sensible financing options, right? And
Yeah.
I love what I do. It's not easy though. If you go back in February, right, we had the beginning of the scandemic,
Yeah.
and that took out a lot of business owners, like in a real
Absolutely.
way. And we were basically working, my team and I, doing the SBA cares, the EIDL and the PPP. We were
Mhm.
working probably 14 to 16-hour days, getting people in so we could save businesses. It was fun. It was a lot of pressure, and we got a lot done. But it
Right.
was definitely a challenge. And now things are starting to come back to normal.
Yeah, finally, man. And
So yeah,
finally we
that's that.
start grasping that normal stuff again. It's been crazy past couple of months, man.
Yeah.
But you know, I know how you have built Sprout, man, and it's amazing everything that you have created through your company, and all the solutions that you offer. Because, like you said, like there were not many offers or options before. You started building all this stuff, and now that you have all these
Yeah.
programs that can help any business, regardless if they're a startup, regardless if they are been in business for 5-10 years, which was one of the problems when you go to the bank. Like they ask you for this ridiculous requirements before you can apply for a loan, right?
hmm Not only that, the time, right? So what people don't
Yeah.
understand is, let's say you are qualified to go and get bank financing. Okay. They could take a month or two. In that whole time, when you're waiting to see if you get approved or not, if you had a piece of machinery there that could be making you 10 or an extra $20,000 a month, well, if it takes 2 months to get the sign off, kind of like a
Right.
mortgage, guess what?
Hmm.
That's $40,000 you could be giving up. So there's a certain opportunity cost as well. People don't factor that in. Time is money, okay?
Right.
Especially when you own a business. So that's a big thing that people need to consider when they're making their decisions.
Absolutely. Now, tell us a little bit more about these alternative programs that you guys have that can offer to any business, regardless of that. I mean, the requirements are different, right? So,
Yeah,
talk to
yeah.
us a little
I'll
about some
go
of these
into them.
programs available.
So really, it's more of a factor what you're doing with the money. Okay.
Hmm.
Why I say that is you should be taking out financing programs that fit the use of funds. So,
Right.
for example, short-term needs like working capital, marketing, inventory, payroll, expansion, things that you're going to need regularly, because nobody is going to drop 20 grand on marketing one time, right? You're going to
Right.
do that throughout the course of the year. Same thing with inventory. You buy and sell inventory all the time. Those are short-term needs. You should be using short-term programs for that, 6, 9, 12-month programs.
Right.
All right. Now, equipment, ideally, you want to do like a term loan or an equipment loan for. Why? Because equipment, you're not going to have to buy as often, and it should last you 5 years, right?
Right.
So usually equipment financing is anywhere from 2 to 5 years. Same thing with a term loan. Term loans are 2 to 5 years. It's a great way to start a business. And all you need for a term loan is 650 credit and 50,000 improvable income. And a lot of times we get people anywhere from 20 to $120,000,
Right.
um, and quick, which matters, But in terms of like the shorter term programs, lines of credit are shorter term. They're usually 6, 12, or 18-month terms, right? Weekly or monthly payments, simple interest rate. Those are really good, and every business should have a line of credit. Now, for people that are less qualified, right? Meaning they don't have, like, a line of credit, you need $30,000 in income consistently, great bank balances, 650 credit, and usually a year or two in business at least.
Right.
If you don't have that, well, what do? You use a working capital line, right? Working capital financing. And those are shorter term, typically a little bit more expensive, but those can get done as long as you have a 500 credit score or higher, and it'll give you the money that you need to grow and expand. And they're good as long as you use them the right way. If you're taking out money to go to Vegas or for a family vacation, not a good use of funds, right?
Right.
You read about all these people who got these PPP loans or these EIDLs, and they bought a Ferrari. Well, that's not what you're supposed to be doing with that money.
Right.
Invoice factoring, that's a great way to speed up your receivables. SBA, we do a lot of SBA programs, whether it's working capital, the SBA Express, we're still doing those EIDLs. It's crazy. The
Right.
PPP expired, but we still get a lot of those EIDL requests.
And there's been a lot of what is it called? A lot of controversy around the PPE and all that kind of stuff, right? Can you tell us a little bit more about, because I know, I believe one of the problems with this, not with the industry, but I think most from the business owner side, like, I don't think they don't understand many of these programs and the benefits, So why don't talk to us a little bit besides the PPE, the three main things you believe most business owners made as a mistake, and the reason why they end up getting into problems when it comes to when financing and applying for a loan, and instead of using it in the right way, they end up fucking everything up.
Yeah. I mean, first off, you need a place that you trust and it actually knows what they're doing.
Right.
Right. I'll give you an example. When the EIDL came out, the PPP came out, people that have never done business financing before were saying they were doing them. I found out that somebody that is in our network, I told him no, because I didn't think the only way to do it was to bend the rules and do it fraudulently. Right. And I don't want to do that. They did that and they charged them 20 points. The most I would ever charge on a SBA is 5%. They charged him 20%, which is insane.
That is ridiculous.
Right? So I think, like, going back to the benefits, every business should have a line of credit. Okay. And the biggest mistakes that I see made are pretty simple. One, not monitoring your credit, both business and personal. Okay. If you don't know what your credit score is, it's very hard to get financing. And when you speak with someone like me, we're going to want to know what the credit is, because we're going to do a soft inquiry anyway that won't impact the credit score, because we need to know, right? Because when you're applying for financing, I need to know what underwriter to send it to. I don't want to send it to 20 different underwriters at once. They all pull my client's credit. His credit gets dinged. And now, we didn't need to do that. So we do a soft inquiry up front, and then we see who's going to be the best fit based on the industry, the cash flow, the time in business, who has the best terms right at that moment that we think is going to approve the person. So one, know your credit. Okay. A really easy way to monitor your credit. I'm not saying it's accurate, because it's not, but it'll at least keep you in the loop on what's going on with your credit is Credit Karma. It's completely free. And then try to establish business credit. All right. I'll in the masterclass, which I sent you in Messenger, and you can give that to everybody that's here. I'll make it free for everybody that's listening to this, for your following. Sweet. Basically, we go into how to build business credit, but you should be building business credit day one. Go on Dun & Brad's, get an account, right? Go to Staples, use your tax ID number, get an account, use it every month, pay it off. Same thing. Get a gas card, same way. Use your business tax ID. Get an Amex using your business tax ID. Use those, pay it off. Any of your vendors, okay, make sure they're reporting to business credit. Give them someone to report to you. This way you're establishing trade lines right off the bat. And you could be experienced or you could be a startup. That's going to help you. Next is understanding why you need the money and how it's going to help your business. One of the biggest things that we do is we want to know exactly what you're using the money for and how it's going to help the business. Okay. Right. So if you're telling me it's a piece of equipment and you're going to be able to do 10 or 20% more business because of that equipment, that's what I'm going to go in to the underwriter with. That's how I'm going to get that signed off. So it's not just qualifications. They want to know that you have a plan for the money and that it's really going to help your business grow. And then
Right.
another one is numbers, right? And I know it sounds crazy, but so many businesses don't monitor their numbers on a monthly basis,
That's
right?
crazy.
Have QuickBooks up and going. No, you should be able to get a P&L and a balance sheet anytime it's asked, right away. Year to date, prior year, your tax returns, all that stuff should be handy. It shouldn't be a chore to get that. The reason being is you want to be able to every single month know if you were profitable, if you made a loss, if it was break even, and why. So you ever hear that expression, what gets measured gets improved? If you're not measuring it, you can't really tell what you're doing. It's the
Yeah,
same thing in
absolutely.
business. You need to know your numbers, and it needs to almost be a science. And if you track them every month, it's easier to set goals and achieve goals doing it that way. All right. And then last, and I know you said three things, but this is pretty important.
Yeah, go ahead, man. Love it.
Business owners need to keep cash in the bank. Okay. I understand nobody wants to pay the IRS. Trust me, I don't either. But keep enough in the bank where you have cushion. I cannot tell you how many businesses I see a week to week or month to month because one, they don't have adequate money saved up, and two, you could have great credit, you could have great, time in business, you could have great financials, but if your account's negative a lot, I can't get you a line of credit. You're going to get
Right.
a higher risk program, or you're not going to get the same rate if I do somehow magically get you a line of credit. So what I try to tell people is keep 10 to 20% of whatever your monthly sales are in the bank. I know that sounds crazy, but that should be doable. So if you're doing $10,000 a month, you want at least, 1,000 or two in there. If you're doing 100,000 a month, 10 to 20 grand. Okay. Keep that level of cushion in there. It will help tremendously with how you score. Another one is how many deposits do you have? Now, if this is mostly breweries, most breweries accept credit cards, if not all of them,
Right. Yeah.
and you guys deal with a lot of cash. So you guys should have a high number of deposits. That's good. You want that. That actually helps you out, helps you score out higher. All right. And
Right.
then last but not least, when you're going through the numbers, check your numbers. See if there's rising costs, right? Like I was telling you earlier, a lot of people pay way too much to accept credit cards. And that's something that you guys should be monitoring. How much am I paying for this? How much am I paying for inventory or for product? Okay. Because when costs start rising, if you don't notice it, it's going to impact your margins.
Right.
So that's just another thing I would throw at you. And there's some creative ways to get costs down. That's a whole nother, that could be a
Yeah,
whole
that's a
nother
whole.
series.
Yeah, but now that we started talking about the breweries, man, I know you have worked with breweries during the past 5 years, right?
Tons
What?
of them.
Yeah, what has been the greatest um, benefit you have seen these people have get from getting alternative financing? You know?
Well, really, I do a lot of lines of credit for breweries and equipment because none of the equipment that a brewery needs is necessarily cheap, right?
Yeah,
No
the
one's
tanks
coming to
and all that
me to
stuff.
say,
Yeah.
hey, I need, yeah, I need a $2,000 to $5,000 tap. No, they need heavy duty equipment. So I would say getting them the equipment loans that they need that make sense for their business, and then getting them a line of credit. And if they don't qualify for a line of credit, we get them a working capital line. But one of the cool things that we do at Sprout is we always want our clients to do better, and get them in better programs. So if you come in and for whatever reason your credit doesn't make the cut for a line of credit, we'd get you a working capital line and then send you to one of our credit repair teams, get your credit
Right.
up, and then in 3 to 6 months work towards that line of credit, or work towards that SBA loan. I also see a lot of breweries come in and they don't manage their books very well, or they have high debt, um, and they have to be responsible with their debt. Meaning, first off, when you take out any type of financing, there's two things you need to really know to see if it's a good decision. One, is the total that I'm paying for this money or equipment, am I going to make that back uh, on a cost basis? For example, let's just say if I get an equipment loan for a piece of equipment for 100,000, And over the 5 years, you're going to pay back 140 or 150, which is pretty normal, even at a low rate, right? Because it's 5 years and it's compounding. Is that piece of equipment going to allow you to make more than $50,000 over the course of 5 years? I've never seen it where it doesn't, but you have to be aware of that. Next, is the amount of cash flow or revenue that's coming in from buying that piece of equipment, does that far exceed the payment? So if you're paying $4,000 a month, that thing better be bringing you in at least $4,000 a month. Otherwise, it's kind of a burden for you to have. So then you have to make a decision. Do I want that piece of equipment, or am I going to be cash flow positive on it or not? So those are decisions that people have to make, and that's a good way to kind of figure out, if you should move forward or not. Same thing with the debt. If you guys have a lot of debt on the books, debt is a good thing when it's used properly. When you are over leveraged, it could be very scary, and when you're over leveraged, hopefully your credit isn't taking that hit and you still are profitable. And that's when you go and get like an SBA loan to consolidate everything over 10 years, right?
Right.
What people don't understand about financing is it's not just a loan, right? It's like you trying to build a house and all you have is a saw or a screwdriver. You're never going to be able to build that house. Business is the same way. But if you don't have someone that can explain to you what program you should be using for what need, you're going to be lost, and it's going to be a real pain. So that's one thing I would highly suggest is really understand your business, know the numbers, keep good cash in the bank, and monitor your credit. And if you could do all those things, you're well on your way to having, good growth.
Now that you mentioned that, it takes me to another question I wanted to ask you, because I think that's also the mindset around this financing. Like, people see this as an expense instead of like an investment. Like you were saying, like if you want to build a house, you need several tools. I think the importance of stop looking at financing as something as a burden, actually as a tool that can help you grow your business and not actually get you into debt. Like you said, at some point, if you know how to manage it, debt is a good thing for your business, if you're in the right position. But the most important thing is to change that mentality when it comes to, like, okay, if you need a loan, you need money because you need a piece of equipment, because you need to expand, you need to do something for your business, for the business, not to go buy a Lambo, right? It is a tool that you have on your hands. Obviously, if you borrow a tool, you're going to have to pay for it, right?
This is the best way I could tell you. There's good debt and there's bad debt, okay? Good debt is anything that's going to allow you to earn income from borrowing it, right? Or OPM, other people's money, okay? I have made a lot of money using other people's money. If you looked at my debt to income ratio, you'd wonder, well, how is this guy able to afford everything that I have on my credit report, right?
Right.
So the truth of the matter is, I do a lot with lending, right? And then I also have a lot of multifamily real estate, okay? Right. Now, if I looked at what I pay, even with that mortgage or those mortgages, if I borrow $500,000 over 30 years, I'm going to pay back anywhere between 1.1 and 1.3 million. Okay. Mm-hmm. If I sell that house, it's probably not going to be worth that. However, so on the surface, that's not really, you wouldn't consider it good debt. But in reality, for every time I take out a mortgage like that, someone else is basically paying, let's say $4,000 or $6,000 a month. The mortgage might only be $3,000. Someone else is paying that debt for me, and I'm pocketing $3,000 a month in profit or income. That's great debt. Okay. Right. So you want to look for situations like that. What's bad debt? Bad debt is leaving very high credit card balances, right? That the interest continues to roll over, and you get into a death spiral in credit. Okay. Bad debt is taking a loan out and not using it to better the business. Okay. Right. That's a situation where that's bad debt. You want to look, debt is very, very healthy. Okay. And I get asked this question all the time: debt versus equity, right? You don't want to
Right.
give up equity, okay, for a lot of reasons. One, equity's final, debt is not. Okay. And then equity, if and when your business takes off, they might have 20-30% of your business and your profits forever.
Hmm.
Okay. Unless they're bringing something real to the table that complements your skill set. Okay.
Yeah.
It's usually not worth it. So that's why I'm a big believer in debt. I am, you know, I have a ton of debt myself, but if you looked at my personal financial statement, you'd be like, okay, I get it.
Yeah.
And so I have made a tremendous amount of money using and borrowing other people's money.
Man, that's crazy. I'm glad that you're sharing all this, and I hope people is taking notes, because um, that's a great shift of mindset. Like when you put it that
Yeah.
way, and you see the benefit when you know how to handle it. I mean, can change everything, can change the entire game in your business, especially during this time, man. That everybody is struggling, everybody's losing their shit, everybody knows they don't know what to do, trying to borrow money, trying to do whatever they can to keep their business alive. But right now, what you're sharing is gold, man. I'm taking notes too. you know, it's it is a very
Well, I'm
powerful.
going to tell you this, and here's a little prediction. Okay.
Yeah.
I think the next 6, 12, 18 months, I don't think it matters who gets elected. Okay.
Hmm.
Because we've kicked the can down the road on a lot of stuff, and all we're doing right now is printing money. Okay.
Right.
I think we're going to have some economic downturn, worse than what it is now. So if you don't have a line of credit, you need to establish one, and you need one quick. And I think traditional bank lending to businesses is going to dry up. The same thing that happened in 2008, 2009, when I first got into the business.
Right.
I see that happening again. The writing's on the wall. This isn't to scare anybody. All right. This is just, hey, think think, what
Two
could
steps
happen in the
ahead.
next 6, 12, 18 months. Yeah. So you should be having you should have a line of credit, and you should be looking at ways to make your business leaner, okay, and more profitable, and also increase revenue as much as you can. So everybody every month should be thinking, what could I do to improve my business? Is it a
Right.
piece of equipment? Is it a marketing campaign? Is it adding staff? Okay. Um, is it opening a new location? Right? Is it just reviewing costs? Like I said, you could get your merchant services down by passing that fee to the client, which is a new program we have, and a lot of people are doing it. That's a good way to, check and maintain your margins. So every month review, hey, how can I get my business running better? And do a real analysis. All right, these are my strengths. Hey, I'm really good at getting people in the door. Okay, I'm really
Right.
good at our food is excellent that we serve when people are in here for tastings. But people tend to only stay 45 minutes, drink, and leave. I want them to stay longer. How do I accomplish that, right? So
Right.
you really want to do is every month, besides looking at the numbers, figure out, well, what am I doing really well, and what can I improve on? How do I improve on that? And what do I need to make that happen? Right. So
Right.
if you are constantly in that mindset and of that mindset, you'll wind up doing a lot better, and constantly leveling up your business.
Right. And I have two questions for you because I didn't know about this program that you're talking about. But before we get to that, I know this is one of the main questions you hear all the time. Like, when is the best time to get a loan, a business loan?
When
That's
you
one
don't
of the
need it.
when you don't need it, right? Can you
When you
explain
don't
us
need it.
why when you don't need it? Because a lot
Yeah.
of people
People.
think a lot of people think, oh, you need to get a loan when you are in trouble, so you need something. No, like that is the answer that I
So
was looking for. Like, when you don't need it, explain us
yeah, yeah.
why when you
So
don't need it.
so a lot of people think that's a sales tactic. It's not. Okay. So depending on what type of loan or what type of program we're going for, everybody looks at things differently. Underwriters look at
Right.
things differently. Each program, okay? But the four constants that really never change is credit, both business and personal, time in business, cash flow, okay, and industry type, right? Those
Right.
are the four constants, and And in each one of them, that you can break things down. Now, when you don't need a loan, you probably have good credit, good cash flow, plenty of money in the bank. That's the best time to do it. Why? Because you're going to score out very high and you're not going to be considered a risk. So you'll get the best terms, which is why I say everybody should have a line of credit. Because if you got a line of credit now, if I got you $100,000 line of credit, you only have to draw $5,000 to activate it. And then that's sitting there for you whenever you need it. Versus you come to me in 2 months, your credit took 100-point dip, your cash flow is a little banged up. You're probably not getting a line of credit at that point. You're probably getting a working capital line. Or could be the difference of, all right, I can get you the piece of equipment today, and in 2 months I can't. You got to remember something. Anytime you go into underwriting, I don't care if it's a mortgage, I don't care if it's a business loan, line of credit, working capital, equipment financing, it's a snapshot in time, okay? They're usually taking either the last 6 months of data, last 2 years of data, it depends on the program, and they're freezing it and they're analyzing that, okay?
Right.
And depending on how you score out is going to depend on the options that you can qualify for. So if you have certain options in the window now and you decide, all right, you know what, I'm going to pass on it. Well, guess what? In another month or two, that snapshot can look completely different. And because you need it, you can pick up on certain things and you're not going to get the same terms.
Wow. Yeah, that's great, man, because that is a perfect answer. And the answer that I was expecting, that I wanted you to explain it that way, because that's something that people need to start changing their mind. It's like in personal, like we have our savings for 6 months just in case shit goes south, right?
Yeah.
And just because we have, and right now that we have those 6 months in savings and stuff like that, whatever happens, right? We have, I think a couple of weeks ago, they just gave us a couple extra credit cards. Like, okay, give us we're not going to use them, but the credit is there, it's available.
Yeah, it's nice to have.
Whatever happens. So I think the same thing, it's the same concept you can apply in your business too, like in your personal finances.
Yeah. And listen, credit cards are fantastic if you use and abuse them. What do I mean by that? Every business I own has its own credit cards, okay? Right. And I'm very strategic. Some have Amex, some have like a JetBlue credit card, some have American, American Airlines. So all my business expenses go on those, all of them. And I pay them off every single month in full. So I'm not paying any interest, right? So my wife, we usually go on 2 vacations a year. We haven't gone anywhere because of the scamdemic. Well, guess what? I just my buddy Matty K, who's an awesome travel agent, I called him. I'm like, I need to go away. All right, cool. I'm like, all right, I have this many points on JetBlue. I have this many points there. What do you got for me? I booked an entire trip, 5-day trip, 5-star like resort with a butler and all that stuff, and they only used a third of my JetBlue points. I didn't pay anything for that trip. I'm taking me and my wife, right? That's all stuff that I would have wound up paying like $4, $5, $6 for, right? So there's ways to use credit to your advantage when you own a business, and you should, right? You're paying for those expenses anyway, right? Put them on a company card. Make sure it's a card that gives you the points that you're looking for. And then, you get stuff like I never ever pay for flights. And prior to this scandemic, I was flying probably 2-3 times a month.
Right. That's crazy, man. And yeah, you're right. That's what I love about this conversation, because and that's what I like to hear when you talk in your group and in your Facebook group and you share all these tips and stuff like that, because these are very valuable simple tips that you can implement not only in your business but also in your personal life, that you can, like you said, you can use and abuse the credit cards in so many ways and you can reap so many benefits from it, not only for your personal stuff but for your business too. So this is valuable, man. This is really valuable because I think helps change people's perspective, especially right now that everybody's tight in money and everybody don't want to lose that. Like everybody's like holding to their money so tight because you don't know what the fuck is going on or what's going to happen at the end of the year, right? But I mean, that's what was that?
Yeah, no, I was agreeing with you.
Sorry, man. There's a little bit of delay, but it doesn't matter.
Yeah. So, I mean, my biggest thing is you need to do that to build business credit as well, right? So
Yeah.
there's nothing wrong with using a credit card as long as you're paying it off at the end of the month, every single month. Even if you have $100,000 or like one of my Amexes, it doesn't have a limit. You know what I mean? You just spend and I still need a line of credit for all my businesses, even with the Amex. Because what happens if, like in 2008, the banks and these credit companies started cutting lines left and right, cutting credit limits left and right. No warning. If you don't have a line of credit open, and that happens, you're not in a good position.
Right.
So it does help to have it all open. Doesn't mean you have to use it.
Yeah, absolutely. No, I totally agree with you on that. And that's kind of like what we do too, like we have plenty of stuff open, but we don't use it, we just use it for what we need. And we also put everything
Yep.
for the businesses on a credit card. And then we just, we are now reaping the benefits that we've been doing this for a couple of years already. So, but it is a great strategy. But now talk to us a little about this new program, man, that you have about the one that you mentioned that the consumer can pay for the transaction. That's what it is, right? Because in this industry that there's, especially right now that people is not using cash, but buying beer online.
Yeah, no, everybody uses credit, right? Now, typically, when a client is taking credit cards, accepting credit card payments, they're usually priced out at interchange plus, okay?
Okay.
So interchange plus 20, 30, 40, 100 basis points. It doesn't matter, right? Interchange is just the fees that Amex, Visa, and MasterCard charge, and then what the processor charges, okay? I don't care what it is. It usually works out to between 2 and 3%. Square is obviously higher. PayPal, a little bit higher. I can't think. Stripe, higher, right? And they don't underwrite the file. So basically, they can put a reserve on any business at any point and keep 20, 30% of your money just held.
Wow.
So this new program, let's say somebody comes into your brewery and they ring up $100, and they pay for it with a credit card. So in this transaction, what's going to happen is they're charged $100. The person that accepted the payment is going to get anywhere between $97 and $98, and the processor takes the rest. That's normal, okay?
Right.
Now, this cash discount or convenience fee is spreading like wildfire, and we have been helping so many clients with it because it really is the way of the future. So in this same, let's just say this same exact example, somebody comes in and they want to pay for $100 worth of, beer. Okay.
Yeah.
Well, their charge usually 103, instead of getting charged 100, they're charged 103.75 or 104. Let's just say 104 to round up.
Mm-hmm.
The client or the person that accepted the payment gets the full $100. And now they would charge a convenience fee or a cash discount of 104. Okay. It's very small on the client end. Like every place around me is doing this now. Very small for the client end, so they're not going to complain. All right. And now, if you think about it, when you're taking that many credit card transactions over the course of a year, you are saving a tremendous amount. It usually reduces people's cost by 90%.
Wow,
right?
that's crazy.
Give you an example. Yeah, I had somebody that was using Stripe, and they were a coach, and they were doing $150,000 a month. Okay. We switched them over to this program, this platform. And by the way, they got new equipment, new everything. Okay.
Right.
And it's more secure. So we got them all the new bells and whistles, all the new equipment, the gateway, doesn't matter. We got it all for them set up. And they wound up saving about $50,000 a year. That's $50,000 added to their bottom line every single year that they're on the system.
That's insane.
And we have enough data that proves and it shows that the people that make this switch do not lose business. Because that is the first thing everybody asks me. The clients complain. Are a few people going to complain? Yes. Are they still going to come to you? Absolutely. And they ask, how do we know? Well, we have thousands of people on the platform, and we can see what they were doing prior with normal how the normal merchant services were, and when we switched them. and they're not seeing a decline in revenue or sales. So there is absolutely no reason not to move and switch to this, because it will save you about 90% of the fees that you're paying. It should anyway. And the easiest way to see that is if you look on your merchant statement every month, you're going to see what the total fees are charged. So if you want to know what we could save you, just multiply that times 0.9, and that's where you're heading. So people love that program. And the benefit is if they have weak cash flow or bad cash flow and they need financing in the future because they're already on that platform, we can get them financing off the credit card sales as well.
That's crazy, man. And I think that's the reason why I wanted to share that program here in the show right now is because I know in the craft beer industry, there's a lot of people that use system like Square and all that kind of stuff. And you just mentioned like it's one of the most expensive ones. Yeah, there's plenty. There's tons of breweries that they use Square and all that kind of stuff. You know, it's and then they just have it there. You know, somebody doesn't even have a clue how the fucking thing works. But I hear a lot of people using Square and Stripe and programs like that.
Well, the problem with those programs is it's like insurance. They pool a bunch of different people and they don't underwrite anybody. Okay, so one of the things that's going on with all those companies right now is because they accepted clients in that fashion, okay, a lot of people are going out of business but still taking payments. So what happens when that happens is the processor's on the hook for that, right? So they started implementing large reserves across the entire board. Plus, when you use Square, Stripe, or PayPal, try getting somebody in customer service. It's never going to happen. Okay. So if I think people are attracted to Square because of how easy it is, but this program is just as easy, and any type of terminal they were attracted to at Square, you can get anywhere else. You could still get the Clover Mini. You could still get the wireless one. You know, you could have ones that hook up to an iPad. It doesn't matter. So if you're using Square or you're using one of those larger ones, or you're even interested in this, reach out. It will make a huge difference in your business.
Yeah, absolutely.
That's a lot of money to put back in somebody's pocket.
It is, man. Like $50,000 in somebody in someone's pocket is like, that's crazy, man. That's a really good. There's no what is it called? I forgot the word, but there's no. Damn it, I forgot the.
No downside.
Yeah, something like that.
Yeah,
like it is crazy.
It's a win. It's a win-win. Like you can't go wrong. And then let's just say all your clients hated it, and you called me up, 2 weeks, 3 weeks after, and you're like, John, this is terrible. I don't want to do this anymore. Well, I just call into my team and just say, all right, switch it back, and then we'll save you a little bit of money off what you were previously paying, and then you take the fees moving forward. So it's really an easy fix.
Yeah, but there's so many others.
Just so you know, no one's made that call to me yet. Not one person.
Yeah, but what I'm about to say is, how many other places or like different type of businesses, they charge a bunch of fees up front and you don't even know about it, or like banks, you have to keep a certain amount of money or they start charging a bunch of shit and nobody complains about it. Nobody calls the bank like, oh, why are you charging me this $10 today? Because they didn't use my credit card. Like nobody calls for those. So a couple dollars that a consumer is going to pay for it, I think it is okay, especially now, man, that everybody is like, oh, we need to support our small businesses,
Yeah, it's true.
Absolutely.
It's true.
But let's change gears a little bit, man. And I know we've been talking about all this financing and it is great, all this information that you've been sharing, man, because you are reminding me of a bunch of stuff that I learned when I was reviewing your course and all that kind of stuff, I want you to talk a little bit at the end about capital gains, because probably someone might be interested in getting into this world too. But talk to us a little about the mindset, man, and what has brought you to this point in life, because I know like your podcast, for example, that the theme of your podcast is based on failure and how to basically use that. And that is crazy, that we are doing this episode at this time, because for some reason, for the past couple of weeks, I will say maybe a month, everything that I've been learning in my life has been about failure, but how to use it, like in the same way you can use debt for your benefit, like how you can use failure for your benefit on your business and your life and all that kind of stuff. And like, I've been listening to a bunch of podcasts, like probably you have here too, like Ed Milet has been talking a lot about it recently, and how how even when you are in consistent pursuit of something, your brain produces more dopamine than when you actually achieve the goal and all that kind of stuff. So talk to us a little
Yeah.
about your mindset, man, and what have been the main tools that you have utilized to come this far with your business when you started from Wall Street and went through all the shit that you went through to now have this powerful company.
Well, I appreciate that. I'll get into it, right? So, first off, failure isn't a bad thing. Okay, everyone sees failure as this awful thing that can happen to you, and most people don't start because they're afraid of failure. The only way you learn is by failing, right?
Right.
So if you think of any outcome, heads or tails, doesn't matter, right? You're either going to win or lose, right? But you only lose when you stop playing the game, all right? The fact
Yeah.
is, most of us don't realize you can dust yourself off and go again and go again and go again. And eventually, every time you go again, as long as you're learning something from your last failure, okay, and implementing it, it's not just enough to learn it, but you got to implement it. Eventually, you're going to get where you need to be. You're going to get that end result. And something that really helps, like, people don't realize, like, a lot of people don't realize, like, they only see success. Okay, they
Yeah.
don't realize how many times you fucked up or how many times you failed, or I have gotten screwed, stolen from multiple times, every which way you could count, right?
Right.
I've had people come in, learn the business from me, do it on their own, inevitably fail. um, you know what keeps me going is my why, and knowing that no matter what, I'm not going to stop, right? And my why is my family and the fact that I love helping business owners grow and succeed. So it doesn't matter, like, any type of failure, all it is a little speed bump that I'm going to learn from. And trust
Yeah.
me, we all have them, and I usually find them and have them more than most. Okay, it doesn't phase me anymore. Like, I'm over that phase, and
Yeah.
you'll see, like, I think that's the biggest driver or biggest determining factor in how successful somebody is, if they can keep going and moving forward even in the face of adversity. And we're starting to see that more and more this year. I think that's a huge sign. And the other thing is, like, always learning. Like, there's things that I do every day that make a huge difference. I start off, I try to be grateful, I try to visualize, I try to get a workout in. Like, I've done 75 hard. I'm in phase 1 of 75 hard now, after finishing 75 hard.
Right.
And that teaches you a lot about mental toughness and just moving forward, and just getting it done no matter what it takes. And failing is okay. If you can learn from it, that's all you need. Like, I failed a lot in real estate before I figured it out. One
Right.
of my early investments of 3 or 4 years ago, I just found out might be in jeopardy. You know, I trusted the wrong people with money again.
Right.
That happens. It's shitty, but it happens, and you learn from it. And running a business is no different. So I think having that mindset, it will help anybody achieve what they need to. And remember, no one's going to remember how many times you fucked up. As long
Yeah.
as you own it and make it right, you'll be fine. They're going to see when you have the Ferrari. They're going to see when you have the nice house. They're going to see when you have a good lifestyle and a great family. That's what they're going to see. They're not going to see how many landmines you had to step on, to get to that level. I promise you.
Yeah, absolutely. And the reason why I really appreciate everything that you just shared is because, the craft beer industry is an industry that most people for so many years, like for the past 10 years, this industry has been like, oh, we just want to make the best beer. But now this industry is entering into a season where it's like, okay, who can run the best business? Who can have the best skills to run a business, the best resources and all that kind of stuff, because all the digital things is catching up to the industry and all that kind of stuff. So a lot of people is coming like, dude, but I just want to make beer. Okay, that's fine. But if you just want to make beer, you have to learn how to run your business, or make sure that your business can run without you, so you can go in the back and make all the amazing beer that you want. So I appreciate you sharing that, because when you're in that process, you're going to face a lot of like struggles and obstacles and all that kind of stuff, you know. And but once you understand that failure is just part of the game, you know, like that happens to me finally this year. You know, I've been for years, I've been working on, I want to figure out how to enjoy the process no matter what. And this year has been like very liberating for me, because it's like, I'm just gonna start a podcast, I'm just gonna do this, I'm just gonna do that, and I fucked it up. Cool. If I don't, great. You know, I will learn something at the end of the day. But I really appreciate you sharing that, because that is exactly what's going on in this industry right now. You know, every time
Yeah.
everybody trying to struggle and grasp the idea of like, how in the fuck we can sell beer online and stuff like that, you know? So
Yeah. And consistency too, right?
yeah.
That's a big piece of this. So you fail once, that's okay. You fail twice, great. Just learn from it and be consistent with moving forward. And like you said, you know, you thought about doing all these things, and this year just said fuck it and you just did it. It is better to take imperfect action than perfectly plan something over and over and over again. Right?
Right.
Really, this boils down to trial and error. Everything in life, trial and error. Okay, so if you're willing to try and fail, just be willing to try again, you know, and be consistent with your output. A lot of people work towards a goal 1 week, 2 weeks. They see they don't get it, or they don't feel they're any closer, and you know, meanwhile their breakthrough could have been you know, a week away. You know, it's like that meme that you see with the two people digging for diamonds, right? One
Right.
guy stops right before all the diamonds, and the other guy, you know, keeps trucking along. Well, the guy that keeps trucking is going to get those. You know, it's been the same with this. Like, you know, you don't think there's been, you know, tough tranches for me with Sprout or other things. Yeah, and Sprout's a big company. You know,
Yeah.
we have our ups and downs, or you know, our struggles. Like I had I found out that my partner's executive assistant was embezzling. She embezzled over six figures from us last year. We found out at
Wow.
bonus time. Okay,
Yeah.
so you know, again, like that's a big setback. Most people, that would have put them out of business right then and there. You
Yeah.
know what we do? We helped more people, balance the books a little bit, and you know, everything's good. You know, but again, things are going to happen that are unexpected, that are going to come up, that are going to trip you up. As long as you don't lose sight of your why, you keep pushing forward, you know, you'll figure it out eventually.
Yeah, eventually everything's gonna come up. So yeah, that's great. And you know, important too is like the people you surround yourself with, because every time I do an episode, every time I'm doing everything that I'm doing, man, like I don't get nothing but support, you know. Even that I know that sometimes I fucked it up, or I did say something wrong, or ask the wrong question, whatever it is, you know, like people just like just keep going, and that really motivates you to be keep pushing forward too, you know, and how important it is to have the right people around, you know. So it is amazing. But
Yeah.
talk to us a little about more, because we've been here for almost an hour, man. I think it's time to wrap this up. Where people can find more about Sprout Lending, about your programs, and how they can. I know you have different stuff that you're gonna share here. We're gonna drop the links here later in the description so people can get to know information. You know, that masterclass and all that kind of stuff. But I know that you also have an amazing program where you can actually somebody who's interested in getting into small business financing, maybe they're interested in learning this industry, maybe as a side hustle or something like that, you know. Talk to us a little about your program, and how can somebody watching this live or later listening to the podcast, how can benefit from this program?
Yeah. If somebody's looking to get into this space ethically, to really help business owners, and they can make a good amount of money doing it, I have a course called Capital Gains. It's under the Break Free Academy umbrella with Stuman. You go there, or if you go in a masterclass, you'll get my email, and just say, hey, I'd like the link for Capital Gains. You take that course, show up on a few live calls, take the advisor assessment, and if if you're a fit with our core values and our culture, you could be a Sprout advisor, and join my team. If you need any type of help, you could always find me on Facebook, Jonathan Fodera, Instagram, Jonathan Fodera. I mean, I'm pretty easy to find. And just don't be a stranger. Just message me. You know, I'm here to help, and take the masterclass. I'm leaving it here free. Go through it. You'll get emailed, I think, 5 or 6 days in a row with different trainings. It could even be more. about, big things that you need to learn and know for your business and how to improve them. And if you need to get in touch with me, that's probably going to be the best way, either that or Facebook.
Right. Absolutely. And just to add to what you were saying, that this capital gain is like I said, is you want to start like a side hustle or a side business or something even serious, Like I know a lot of advisors, they own their own business now, right, under you, and they have been doing great money and great stuff and really helping a lot of business owners. But anyway, man, before we wrap this up, just one more piece of advice you would like to share with my audience, man, before we wrap this up, and then you are basically share your information where people can find you. We'll always add it to the description and your personal page that I do on my website with the podcast. But one last more piece of advice that you would like to leave my audience, man. You mentioned something important, and I believe what you're saying with your prediction, what can happen in the next 18 months, or next year with all this, we might gonna see something a little bit.
Yeah. I would tell you, if you own a business, get a line of credit, right? And always know, like, those key metrics I went over, credit, cash flow, all those things, you need to monitor that stuff and control what you can control, right? And if you're doing that on a monthly basis and you're analyzing the numbers and always looking to level up, and really, I think of skill as being able to be self-aware, right? Not just, personally, but in your business. So if you can analyze yourself, the business, and see where you can make improvements and continuously do that, I think you're going to be way ahead of the competition, because most people lack the humility to be self-aware.
Right. Absolutely, man. Thank you so much for that, man. And thank you for coming to the show, man. It's been a great time here with you talking about finance. I always learn from you, man. That's to be completely honest with you. I always learn something new from you. Like the way you express things, the way you explain things.
Well, I appreciate you having me.
Yeah, absolutely, man. It's been an honor. And for you guys listening, if you enjoy the show, make sure you share with somebody, put it on social media, send a DM, a text message, email, whatever you can do to help us spread the word. And also make sure you leave us a review on iTunes or subscribe to the YouTube channel so more people can find the show and get access to all this valuable information. I will see you guys for the next episode. In the meantime, be safe, keep working hard, and cheers. Later. Hey guys, thank you for watching. This show was brought to you by the Marketing Brewing Company, an industry-leading marketing provider and coaching firm. If this episode have provided you with valuable information for you and your business, make sure you subscribe to the YouTube channel. And if you know somebody who needs to hear this, share it with them. Send me a text message, a DM, put it on social media, whatever you can do to spread the word. And lastly, if you're a brewery owner ready to take your business to the next level, make sure you head to marketingbrewingco.com and fill out the form to get started and get your free assessment of your current marketing and sales strategies. I will see you guys for the next episode. In the meantime, cheers.